we talk a lot about hybrids and balance sheet lender and you sell loans and things. And I've said many times before, I think that kind of doesn't really get to the heart of what we're trying to do. What we're trying to do as platforms is be the most efficient intermediaries between investors that want to lend capital or savers and small businesses that want to get access to capital to grow and expand, or individuals as well. And the most efficient model and the most efficient way of doing that is not to hold any inventories, not to do any lending, because that's when you can really get really powerful network effects.
And I think a next generation bank, what the customer wants from a next generation bank is a bank that consistently acts in the best interest of its customers. And it's impossible to act consistently in the best interest of its customers when part of your business is built on long 0% and then you're hoping that the customer stays and pays the much higher interest rate. Or part of your business is built on hoping that the customer either overdraws on their current account or goes over limit on their line of credit. And that's how you would make money on it. Thus, we will design products that will not have over limit fees, where our interests and the consumer's interests are always aligned.
The customers solve primarily for price. It's a 60 to 70% of the decision factor on a financial product is price, and that is always going to be coming stronger from the bank if they can solve the other issues that they have, which is ease, convenience, fast turnaround, fast service, etc.
Yeah, okay, so I think that's really interesting, and I think where that's leading then is sort of like what is true innovation, what is really sort of revolutionary from a customer's point of view. What's happening right now is bells and whistles around a current account.
I think what we're promoting is this revolution of customer first. Let's think about people's needs. Let's change the space. Let's give customers the best value, the best price, and offer this amazing experience. And I think banks will realize that actually wins, and that actually takes away from their market share. So they need to catch up.
This sector should never have existed. It should never exist in the first place. It existed because there was unmet demand. The banks were not providing a product that they should have provided. So the reality is, banks are waking up now, and it's going to impact the space. I think there's going to be banks will acquire platforms, banks will start their own, and it's harder. It's going to be harder to succeed in the next 5 years than it was in the last 5 years. So, but the strong platforms will survive and thrive, I think.
I think there's a lot more interest in collaboration. I think when it started 3-4 years ago, everyone was just busy getting on with their business model. Now we're getting bigger. We want to improve our products. We want to offer new complementary things to our customers. So there were some great examples of fintechs partnering with banks and money apps partnering with lending companies. So it's been quite an interesting conversation.
We've been raising over $1 million a month in innovative finance ISA money. We've seen 70% of our funds now come from the innovative finance ISA. So we think that will be a great game changer for the industry. We should see the growth really accelerate over the next few years.
This to be a bank or not to be a bank, because the only reason AltFi, not your AltFi, but alternate finance came about is it's regulatory arbitrage. And so every time they change the regulations, we're going to get another form of regulatory arbitrage. So I think that was the biggest thing that came up.